as wage talks move the needle for markets. Chung is head of Asian fixed income at Principal Asset Management. How good to have you with us. Perfect day to be having this discussion. Does it move the needle for you? I know that for you, the base case is April.
Yes, I think it's about the stars being aligned. Right, we're getting to a point whereby we're looking at the economic numbers, the inflation numbers. They're reaching to a point that BOJ is starting to get comfortable. Two, the government in line with BOJ. Right, this hasn't been the case for years, and this is the one time the PM Kishida has kind of said that, this is the time when inflation is reaching this point, wages are reaching this point. We want to kind of call for BOJ to start moving as well. And then I think the third thing that's happening is this window between, what's happening globally in terms of what the US is doing, in terms of thinking about lowering rates at some point in the future. This is the window for the BOJ. And I think all three stars being aligned, I think is triggering the market to think about what happens in April versus March. But down for how we think about it, Tankan survey in April is going to be key, right? They might want to kind of wait to see what the numbers are, because this is a very important sentiment survey for how businesses think in Japan.
Does it even matter, though, whether it is March or April? How are you looking at it?
I think that's a very good point, right? What the rates market do and what risk markets do might be kind of different, right? This is kind of the opposite reflection of the Fed on how rates and equities are doing in the US. Whereas here, I think you're absolutely right. Rates markets have to kind of think about whether they want to price in a March, and we're starting to move towards that. But what's more important is also the nature, besides what the interest rate policy is what happens to the yield curve control, right? Markets are starting to think about how would that evolve, because at yield curve control, it's all about keeping that level of yield, which we are already loosening some boundaries around that 1%. Now, the market's starting to think about, is it about the quantity that JGBs that they can buy? Is it about when they can buy, how frequent they can buy? So it's getting a lot more nuance even at the YCC. So the rates move is not entirely really down to just what happens to NIRP.
What does it mean for dollar yen? We're talking about a move by the BOJ to zero, and people are talking about repatriation of funds. I mean, how is that even likely? Why would anybody move from 5% to almost still nothing?
Well, there's kind of two parts of this, right? One is the relative angle, relative value to it.
It's optics.
Yes, it's optics, and it's also where you started from, your starting point, right? What you have overseas versus coming back. The other part is on a hedge basis, right? And depending on the pace of the Fed move versus the BOJ, that can have an impact on what that swap basis on JGB yields can look like. So there is an element about swap basis, not just the absolute levels, in thinking about what comes back.
So where to for the yen? How much more upside? I mean, are we looking at current levels, at most is 144, 142, but forget about 130 levels?
No, I don't think that's kind of, we need a few steps towards that. And of course, there is a reflexive cycle between what yen does with equities, right? I mean, how the yen has behaved is very similar to how the equity market is behaving, largely because this run-up that Japanese equities had is largely down to the exporters, right? But that doesn't mean that's the end of that story, because the banks and the financial sector is slowly improving. There is potentially another leg down to it. But right now, the correlation between the yen and the equity markets can have another round on how BOJ thinks about rates and yen.
How attractive are Japanese assets right now, bearing in mind the BOJ has come out to say, you know what, we may move, but you will not see consecutive moves.
Yeah, we like some of the financials in there, at least in the credit space. We think that that's been a place that I think there's an allocation, there's an under allocation to that space. It is a space that we think that it's a good complement to what we have in other developed market financials. And of course, the story, as I said, as Japan thinks about moving away from deflation, thinks about how the financial sector is going to do better from here on, including the equity story, we kind of think that's an opportunity for us.
The biggest risk right now? Given that markets probably would have run ahead of itself already?
Yes, I think it's a yen that kind of runs more than what the BOJ can manage. It's just the very same opposite of where we thought, 140 was max, we hit 150, and now the opposite might be, just depending on what the overall environment might look like.